Welcome back. It's Hema here, and we are going to take a look at the VIX, the volatility index, because it is trading at some key levels. Today's Thursday, January 27th, 2022. Now, important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. So let's bring up the chart of the VIX. So here you can see that I have the daily chart of the VIX Volatility Index. And this is basically measuring the amount of fear that's in the market. And at a time like we're at now, where there has been a dramatic fall and then a little bit of kind of a hangout going on now, a wait and see, it's very important to check on this. So yesterday in my advanced monthly group coaching live, my first ever monthly version of that session, students and I went through the VIX index top down from a monthly to a weekly to a daily chart. And I'm going to walk you through our resulting analysis, some very important levels to watch. All right, so here we have every candlestick representing 1 day of price action. And you can see that the VIX has been climbing higher, right? As the market, the SPY, the S&P 500, the broad market has been falling. Now, the past couple days, the broad market has stabilized and so has the VIX. And there are a couple levels here that are really important. 32.49 is a short-term level based off of the recent action. And the way I calculate that is something I teach in my Gann candlesticks system. It's my nano twist. So you can see that over the past couple days, because that level has been important since January 24th, the VIX bars have traded through 32.49, but they have not been able to close above 32.49. So that right there gives me more of a sign that the VIX is going to be turning lower, in which case the market, the SPY, the S&P 500 would be turning higher. Now, how far high or low market moves only matters if you have an idea of where it's going to go so you can trade accordingly. So I'm going to pause the screen here for a moment and I'm going to do a quick forecast on the VIX. Back in a second. All right, I'm back. So you can see that didn't take me very long at all. Really, it took me about 5 seconds to make the forecast, and then it took another few seconds to annotate it on the chart for you. So the intersection of the two lines that you see here, these two yellow lines, that is actually the forecast. A forecast is a very specific point on your chart. It's where price meets time. It's like a magnet pulling price to it. And you can see that this forecast suggests that there is a turning point at about 32.49. Again, completely different measurement, but it's giving me that same zip code of price. And it's for today, January 27th. So this is based off of the cycles that are coming off of this January 4th low on the VIX. And this is suggesting that there is an important point of energy into today and that actually the expectation on the VIX is to form a low. And so that would mean having a price bar after that with a lower low, and then another price bar after that with a higher low. Again, the whole bar low, price low, swing low, I detail in the winning price action playbook and missing trends strategy. So how do you navigate this? Well, right now, a couple things are important. Are we going to get a closing break above 32.49? That would suggest more upside on the VIX and downside in the market. If that occurs, you can see that my next upside target on the VIX is at 41.16. So I'm not necessarily expecting that if the market turns lower and the VIX turns higher, that we're going to get a move that's, really similar to what we just experienced, but it would be further downside. Now, if the VIX is not able to get above this 32.49 or this forecast and starts to push lower, then here's what I'd watch for. All right, so I did another quick calculation. This was another use of Gann special retracement numbers. And on that, again, if we stay below 32.49 on the VIX, so if the broad market keeps kind of churning higher, then the support on the VIX is at yesterday's low at 26.90 and then also this 22.76 nano level I just calculated. So all of this is very dependent on whether the bulls in the market can really surge higher and such that the VIX would be coming down, or if the bulls are not strong enough to pick things back up and the market continues to weaken, in which case the VIX you would see trade probably up towards this 41.16. Now, if the VIX got up to 41.16 and kept going, you can see that I have another resistance on the VIX laid out at 49.79. Right? So it's important to watch the VIX alongside the broad market action. And remember, the broad market, the S&P 500, the Dow, when they're volatile, there are other markets that are also volatile, especially the crypto markets. So while I'm not specifically talking about crypto here, keep in mind that the volatility in the broad stock market definitely spills over into the crypto markets. And so it helps to watch the VIX not only for trading stocks, futures, and options, but trading these more newer, alternative, non-traditional assets as well. So remember to subscribe, like, and follow, and I'll catch you on the inside. You can sign up at the link to get my hot, timely, actionable updates as soon as I publish right to your inbox.